Welcome back to the Indo-German Startup Week and our Investors Day, the final day of the Indo-German Startup Week. Now it's time to have a look at some German funds that might be interesting with different perspectives, either in regards to Indian investors to collaborate and get a footholding here, a competent partner on the grounds, for German startups, of course, and maybe for Indian startups. The way we'll go through it is that we'll have a quick pitch of 4 funds here in Germany, each 10 minutes, and then we have, I think, hopefully 15 minutes left to have a short panel discussion with all of them and also include your questions in the chat. And here, their perspective also, how they think collaborations are possible already, what maybe is one or the other barrier that needs to be overcome. So let's start with Anne Goethe, who's the head of investor relations at Project A rather famous German fund, I would say. Please correct me, Anne. I think currently, at least according to Crunchbase, you have almost 150 investments, 22 exits already, a huge fund around 600 millions. So you certainly are one of the funds one should be aware of. Glad to have you here in our pitch today.
Thank you so much. So am I starting now? I think
yes, you can start, yes. And you have around about 10 minutes, if that's all right with you.
Then I would actually love to share my screen. If somebody could shout if you can see my presentation, that would be amazing. Can you see it? Perfect, thank you so much. So thank you so much for having me here at the Indo-German Startup Week. Like you said already, my name is Anne Goethe. I'm head of investor relations at Project A. I've been with the fund actually now for about 5 years, supporting in different roles. I've been an operator for some time. I've supported the investment team, and yeah, now since 2 years, I'm head of investor relations. So I was asking myself, maybe we should define Project A little bit. So what is Project A? The way I would define it is we are a European early stage operational venture capital fund. So let's maybe dissect this a little bit. So when investing, we feel comfortable in Europe. This is our home turf. We invest in European teams in the early stage. So we come in pre-seed, seed, and Series A stage. And this is something that makes us unique is we're operational. So beyond capital, we've got 100 digital experts sitting on our payroll that can exclusively, so only support the portfolio, and very important for us to highlight, only optionally. So we don't force our support onto the startups, but if they ask for it, we're happy to provide it. And yeah, we're obviously a VC. I think we're all quite familiar with this term. So as such, Project A has established itself as a leading European investment brand since 2012. What does that mean? So we're actually backing some of the, one could say, most prominent European ventures. If you have a look at the top left corner, I'm sure you know some of these brands. So Trade Republic or Stenda, Krü, Voi, Cassavo, or maybe even Spryker. I would dig a bit deeper into the track record in a second in the top right corner. Like I said, I think our core differentiator is this operational value add. So we really have 100 digital experts from different departments sitting in talent acquisition, so we can do recruiting for the startups. In data, we've got marketing experts, marketing channel experts, so that can do SEO, SEA, or social, but also marketing generalists. We've got people sitting in tech, working in front end or back end, design, product, QA, etc. So pretty much all the departments that we find relevant for tech kind of tech-based business models. And as such, we actually created quite a synergistic platform, I would call it. So beyond providing the support and capital, if you have a look at the bottom right corner, we conduct events with the ecosystem. Our Project A Knowledge Conference is quite known to date. We really love conducting investment roundtables or expert exchanges. And all of that really led to a quite substantial industry network. We also have a quite solid LP base by now. We've got institutional investors that are supporting us. We've got family offices, a lot of corporates that are invested into Project A, and of course, some very stellar angels. We also have, because of that, a strong angel network. strong founder network, and also some very trusted syndicate partners to shine some light. We typically and very much enjoy investing with, for example, Creandum or Excel, and also many other VC funds. And what does that mean? So when we go in, when we invest, we typically lead or co-lead a round. And if we co-lead, we do that typically with one of these syndicate partners. Let's have a look at the track record. I would say that we really managed to get systematic top performance. So on the left-hand side of the slide, you can see we've got like 4 or 5 unicorns in the portfolio right now. That's a World Remit from the UK, payments, they facilitate payments across borders, a Zenda or a Cru from the Project A2 portfolio. You might know these companies. Zenda is in the logistics space, Cru is a telemedicine provider from Stockholm, and yeah, a Trade Republic, I think that everybody knows very well. And with these 3 different funds, we really managed to achieve especially very strong TVPIs, so total value to paid in. Our multiples are looking pretty decent. If you look at the first fund, that's a vintage 2012 fund with 80 million initially back then, backed by Otto and Axel Springer as our 2 sole LPs. We're facing a TVPI of 3.3. Now I'm spoiling something. Spryker will soon also be a unicorn, and taking their success into account, I'm sure our TVPI will increase even further to around 6x. I kindly ask you to refrain from taking screenshots because this is fairly confidential, but I'm happy to share in this circle. Also, our Project 2 fund is showing a TVPI beyond 2, and the net IRR, this is always net, so subtracting all fees of about 30%. And then Project A3, that is our most recent fund, vintage 2019, is showing a TVPI of more than 4.5. That's primarily due to Trade Republic. Trade Republic is really developing fantastically. They are valued more than 4 billion by now. We're holding roughly 10%, so you know what that means for the fund. And yeah, that's also the explanation for this 200% net IRR, which will obviously go down a bit in the future. But yeah, it's very tremendous. And we, beyond Trade Republic, also have great companies in that portfolio, such as Unmind from the UK, another digital health company, and other companies. And yeah, of course, Trade Republic is a bit overshadowing the others. So yeah, what I said earlier is, especially TVPI-wise, we are benchmarking quite nicely. Some of you might know Prickin, the quite known database for VC benchmarks. Here you can see with actually all funds were benchmarking pretty much top quartile TVPI-wise. And having a look at the portfolio, I would not 100% agree with your statistics that we've invested in about 120 companies, but nearly, rather 70. And yeah, I think on this slide, 2 things are worth mentioning. So we're a sector agnostic fund. We invest in pretty much every industry, and then we find specific themes more or less interesting, and we build hypotheses around these. And I think one can see a bit of a shift over time. So if you look at the left-hand side, at Fund 1, we invested quite a lot into marketing tech. So marketing back then was quite hyped, and also into commerce business models, so quite a lot into e-commerce shops. I would not call them like trivial topics, but I think one can conclude that now we're investing into bigger kind of B2B topics. If you look at Fund 3, we've invested recently quite heavily into business infrastructure. So Price Loop is a pricing algorithm, or we've invested into developer tools. And this is kind of like what's keeping us awake at the moment. And the second point I would like to highlight is maybe it's a bit like beyond the scope of this 10 minutes pitch right now, but we're also investing into buyout topics. That's the last line on the slide. So what does that mean? This is a bit exotic and very atypical for a VC fund. And this is only possible because our operational support. So it kind of opportunistically happened over time that we are pursuing the strategy. And what happened was that the mid-cap PE funds of 3i, EQT, Bregal, Triton, and Co., they approached us and said, hey, Project A, we would actually like to use your support, because sometimes we find mid-sized companies in the middle of nowhere in Germany, primarily Germany, but not only. We're a bit worried because we see the core value drivers in the digital space. We're a little bit worried that we don't find the talent here in the middle of nowhere to actually pursue and materialize all the digital levers. Could we use your operational support? And we said, this is something we only offer exclusively to our portfolio. So the only way we could do that is if we invest as well. So we found a very nice kind of like a concept on how we do that. So when they, as usual PE, invest their majority stake, we tag along with like a 5 to 8 million, kind of like a Series A ticket, so that they can use our support. And what's very attractive with this strategy for us is we then get like there's kind of like a sweet equity component. What does it mean? We get kind of like an extra multiple on the performance. So when they do like a 2.5x, we would get a 3.5x. If they do a 5x, we get a 6x. So in other words, one can say this is an alpha opportunity, so a higher return for the same kind of risk. But like I said, I'm happy to take it offline because I think it would really be beyond the scope to go down that route further. So some companies develop really nicely from startup to scale up. So they have received very successful follow-on rounds, are showing quite nice multiples. And what makes us particularly proud is that some of them are saying that we really significantly help them get there. So and maybe something also worth mentioning, it could be a little bit counterintuitive that we are also supporting these unicorns really heavily. One might assume that we are primarily supporting operationally in the beginning, or companies that are maybe not going so well, but that's not quite true. Especially in the last year, Ascenda, Trade Republic, and Spriker really used our support. And let's recap again what Krü is doing, because it was also because of COVID that their business model was very accelerated. So as I said earlier, it's a telemedicine provider from Stockholm. So they provide doctor appointments via video call. And Johannes Schild the other day said, actually having the expertise of Project A on board help us take it really properly from startup to scale up. And I love putting numbers on things. So what does it mean that we heavily supported them? In the last year during COVID, when digital health topics were really accelerated, Krü used us in total with 13,000 hours of support. On average, they used 7 of our people per month. I think that's very substantial. And primarily coming from 4 different teams. Let's also put some faces to these people. Here on this slide, you can see the faces of our team leads. And what I said earlier is in total, we've got about 100 people supporting us. Maybe what's also being used very heavily is worth mentioning our recruiting. So I think we've recruited about 140 people for our ventures last year. And we've built in total like 40 data warehouses. It's also a typical kind of entry project they're asking for. It makes sense, right? To like really be data driven, you need a solid data warehouse. And speaking about the team, on the GP team, nothing really changed. We still have our 4 dedicated and proven GPs from Flo Heinemann to Ben Fischer at Project A. And it's great that we're speaking now because we're currently fundraising. Let's have a look again at the funds we have to date. We to date raised 3 main funds in purple here, and we're raising again a main fund, the Project A4 with 300 million, and for the first time also a dedicated buyout vehicle. That's the strategy I just explained, and the minimum ticket size per fund is 200,000 euro. And next year, that's also worth mentioning, we're also raising an opportunity fund. Maybe in a nutshell, what is an opportunity fund? Some of you might know the concept. basically with these vehicles, we invest into the winners of the existing portfolio. So standard portfolio construction also means out of risk diversification reasons, one typically only invests in one asset of a portfolio until a sort of like strategic allocation threshold has been met. So once you've met these, you might not want to give away your pro rata in the growth rounds. So that's then the situation where you can then only continue investing pretty much with such an opportunity vehicle. So in the last opportunity vehicle, for example, the companies that are in there were Trade Republic, Sender, Cru, and Spryker. So yeah, that's that. And maybe final words, then I'm done trying to speed through this. On the timeline, the timeline for the fourth generation and also the buyout one is actually that we're closing in 2 steps, and the first closing will happen now. So next week, I'm inviting investors for onboarding. We will do the first closing by end of October this year, and there will be a second closing next year. Why is that? The main reason is that we're accommodating the budgets of institutional investors that are wanting to use their 2022 budgets. Yeah, so thank you so much, like I said, for having me, and I'm always open for a chat if you have any questions.
Thanks a lot, Anne. Wonderful. Yes, we will have a chat, but we'll first listen to the other 3 pitches, if that's all right with you. So we will have the chat. Let me just quickly calculate around 12 p.m. local European Berlin time. So please feel welcome to watch the pitches, or if you have to also answer some emails, make sure to be back by 12 p.m. All right. Thank you. And I'm looking forward to hear more of you then later in our discussion. So next up is Miguel Encarnacion. I hope I pronounced that correctly, Miguel. You're the managing partner at Unifer Ventures, so an early stage startup investor with a focus not only on the EU, but also on Southeast Asia. And apart from that, you personally, Miguel, are also quite an active mentor and ambassador. I saw a lot of initiatives that are happening here in Berlin. You're involved in Asia Berlin, in the German Accelerator, as well as Silicon Alley. So yes, you're really out there on the streets, closely in touch with our ecosystem here. That's great. Welcome, Miguel. The stage is yours.
Thank you so much. I will share my screen as well. And while I am loading this, I just want to say that I'm very honored to speak here side by side with, in my opinion, the top fund in Berlin in Project A. So I think the organizers have intentionally invited funds on both ends of the spectrum. So coming from this mega fund with hundreds of people, now you're talking to a micro fund with 2 managing partners and 5 other people that support us as operating and venture partners. So we're at the different stage of the venture life cycle. I'm a Filipino, first of all. I need to start with that. I moved to Berlin in 2017 to set up Unifier Ventures. So we have a German investment vehicle. So we have been investing primarily in Berlin over the last few years. We don't have a large portfolio, but I'll tell you a little bit more about that later. As a start, I'd say that we're an early stage cross-border fund. So we have an innovation network, we have a venture building studio, and we also have operational support vehicles in Manila, where I am currently at actually. So I'm working remotely from here, but we do have 2 offices in Berlin and in Manila. But maybe to set the stage, I think I need to explain that we are a specialist fund. So we're a cross-border fund that focuses really on internationalization. So we really play in this corridor of Europe and Southeast Asia as a starting point, because that's where most of our networks are. As we get bigger, we want to accommodate other emerging markets as well, right? And that's why I guess India is very relevant for us. We have looked at Indian founders entering the German market in the past. I would not look at the German founder entering the Indian market. That would be out of our coverage for now. But for the Indian founders here, that's something very interesting for us. As a starting point, why we're cross-border, the way we think about Europe and Southeast Asia, and again, I'm talking about Southeast Asia a lot because, I mean, that's our primary market. But like allow me to explain our thesis. We believe that Europe and Southeast Asia, the playbooks to scale in these two markets are very similar, right? It's many smaller neighboring countries. It's not mega markets like the US, China, India, different cultures, languages, religions, even, like regulations and even religions. And I think that the mindset to win these markets are win local, but think global from day one. At the same time, while they're very similar, there are a lot of complementary things. I believe that Europe is the deepest technical talent pool in the world, right? But they have an inverted population pyramid. And Southeast Asia, India as well, we have young, very fast growing digital markets, right? With people that are very eager to learn and a lot of, mobile first populations. In Europe, I think there's a push for revitalization by the European Union at all levels of government. So there's a lot of money going into different, like programs right now in Europe. I'm going to talk a little bit about that later. And Asia is hungry for innovation, right? Like there's a lot of infrastructure spending, rapidly modernizing cities and national governments. But by and large, I think we still don't have the deep tech capabilities to build these technologies and innovations locally. And that's what we're looking for. So we're looking primarily for technologies in Europe that we can bring back to our home market. So I think that might resonate with some of the investors in the room that are interested in bringing or looking for European technologies to bring back to India, right? So I think there's a lot of very complementary elements with these markets. So who are we? Like I said, we're a small team. So the Filipino is generally based in Berlin, whereas the German is based in Manila. So that's my partner, Manuel Bierman, our other managing partner. We've got a small team there in the bottom of operating partners and venture partners. Maybe the most relevant part here is how this whole idea started is the three people you see on the left. We actually managed a family office together. So we started a pioneering family office in the Philippines around 10 years ago. So we've been managing a portfolio together for a long time. And as you see here, it's also a small portfolio, but we've been relatively successful. We did around 54 deals across 4 years, 17% IRR. And then what you see there on the bottom, all those logos are all the tech investments we've made, all the venture building and support stuff we've done. And Zach has mentioned we're quite involved in a lot of different groups, like with the Berlin Founders Fund, German Accelerator. All the logos with the Brain logo, those are the investments we've done over the last 2 years, which we've warehoused for the new fund that we've set up in Germany. So it's a very small portfolio, but I think what's important is we've been able to create some success. So we're, I guess, 2 years into the fund, and we managed to generate our first exit. So we're able to show to our network of family offices in Southeast Asia that our thesis for Europe does actually make sense. So we were able to, so one of our companies was sold to a large unicorn in the US. So we're holding on to that right now at a 4 to 5x markup in just 2 years. We'll probably hold until an IPO where we'll be able to get like 10 to 15x over the next 2 years. So we're happy that we've been able to create some success already. And I think the next step for us is really to raise a larger fund now based off of this proof of concept that we've created. So that's the plan over the next few years. In terms of investing, we look broadly at a lot of different industries, but we do have a specialty in future of work. So we've done 5 investments in future of work over the last 2 years. I'm leading another round right now, and again, future of work. So we like that space. We've done fintech, we've done health tech, but we'll look at anything, right? The most important thing for us is there's a cross-border element. Either it's a German founder looking to expand to Asia, where we can help with market entry, or it's an Asian founder looking to get into Germany, and then we can share our own experiences some of them painful experiences entering the market. It's still not that easy, but we can help because we've experienced it firsthand, how to enter the market. I have some other slides here on, like why exactly we're so keen in Europe. Maybe not so relevant to discuss at this point in time. We can bring this up again later. I just want to end with this, right? Which is what I started with, where I said, we're interested in Europe because we see that there's a lot of what we call free money in Europe right now, right? And we look at this more from the perspective of arbitrage, where in a lot of emerging markets, there's still not a lot of government support going into this whole innovation and technology space, right? Whereas in Europe, and this is when we started paying attention, back in 2014, they launched this Horizon 2020 program that earmarked 77 billion to be deployed across 7 years. And we're done with that program by now. And what you're seeing now, that some of these successes, I would argue, is a result of this Horizon 2020 program. So what's very interesting is you would see companies like this. So this is a screenshot from a deck. You don't see the company name here or anything, so you don't know who this is. But if you see the different circles, right? Like they have current funding of 281,000. Upper left corner, they have a statewide founder stipend, 24,000. Lower left corner, regional business plan competition, 7,000. Upper right corner, national founder stipend, 125,000. Lower right corner, local media fellowship. There is so much money at every level of Europe right now. City, state, nation, regional level, that this allows founders to create their businesses like with very little friction, like you can get to MVP even, in some cases, product market fit with mostly government money, right? And you can see that here in the next slide, again, anonymous, but you see there on the top line, this company is saying, we need to raise 400,000 to unlock 2.1 million euros in subsidies. And I find that, as an investor, I see that as an arbitrage play where there's a lot of free money around, like my 400,000 can unlock a lot of other money in the ecosystem. And that's why I'm so excited about Europe. So I guess I'll stop there. And like maybe we'll get to questions at a later point. Zachis?
Yes. Sorry, we were just distracted coming up with clever questions. You were done with your presentation. I'm sorry, I missed that cue. Thanks for the presentation, Miguel, and actually undercutting some time a little bit, so that's perfect. There are already some questions here in the Q&A bit, which I just had a look at. We'll save them for later, so thanks already for asking questions in the Q&A bit, and please add some more questions. I see some questions, for example, from Sachin. Just add some more questions. We'll come back to them in 20 minutes. So thanks, Miguel. I also have some questions. I'm very much looking forward to have you in our chat in 20 minutes. Before that, however, we still want to hear from Parul Madan. She's the founder and CEO of DueDash. And what's really exciting there is that DueDash actually was announced and launched a year ago, the last time we came together in the context of the Indo-German Startup Week. So I'm very excited to hear how it's been going in the past month and what status you're at the moment. Welcome. You're still on mute, Parul?
Okay, sorry about that. Just give me a second. I'm just trying to set up my presentation. So thanks for having me here today. And I will be sharing my screen as well. And just give me 1 second and I'll request you to confirm if you can see my screen. Are you able to see my screen? Perfect. Okay, fantastic. So Yakis, that's right. We met last year, and again, thank you for having me. And I'm really excited and also honored to be here today. Just to give a brief background, I am a multi-time founder and angel investor through my family office. We've invested over 40 global startups, and I'm also advisor to many of them. In the past, I've also launched accelerator programs in the region in partnership with the big corporates as well. to bring some vibrancy in the ecosystem here in Cologne, where I live. So in the region of Cologne, Bonn, and Düsseldorf, that's predominantly my playground, and brought these learnings now to DoDash as a founder and CEO. And I will try to keep it under 10 minutes so that we can have more time for Q&A. That's going to be more exciting for everybody, I guess. So moving on, what is DoDash basically? So DoDash is a data-driven toolbox for investors, ESO, startups, startup founders to successfully partner with each other with higher efficacy. And the idea is to increase the speed by up to 40% gain achievement. And before I go further, I'd like to tell you that by now, by the time I'll finish this presentation, approximately $2.8 billion would have been already transacted during this time. So this is the usual visual that comes to a mind when a deal comes onto the table. And while both sides want to work together, there is usually a big potential to be unlocked. And that is because unequal expectations meet insecurity due to information asymmetry and incoherence. And there is no room for error. We've seen with the presentation from Anne, there are so many hot deals which are there, and you want to be sure that none of them are lost. They're not, when they're especially flying under the radar, you don't want to miss out on the next big thing. So how do you solve for that? How do you ensure that you are doing everything properly and correctly? And that is the reason why investors have to do a lot of heavy lifting in due diligence phase. And what Miguel also mentioned with this cross-border transaction, he has competency from, right from Manila to Germany. And it takes between 50 to 60 hours on an average for even curated deal flows to go through with our research that we have identified doing different conversations with both VCs and angel investors, family offices, and institutional funds. And our goal is to reduce those bad surprises for investors throughout the due diligence by becoming their single source of truth, right from very early stage of sourcing to the later stage of making the transaction to have a transparent due diligence process. So that's basically the goal. And we can achieve this by incentivizing founders. So this is a quick preview of the platform to keep their data room in a structured and a secure way up to date as they receive automated visual comprehensive feedback on their investability quotient every time they upload the required information. And we have a digital assistant test, who guides founders and also produces proprietary scoring for startups' investability. And this is the way we are trying to make startups investable and at the same time help investors make data-driven decisions, overcoming any cognitive bias that may arise while making that decision. Well, a note of caution for dear founders here, it shouldn't replace the difficult and the important work of building relationships and finding the right core investors for yourselves. So our strategy has been product-led. We launched our global startup community platform last year in Q2 of 2020. Since then, it has grown organically with over 4,000 active users, which includes startups, investors, experts of different shapes, sizes, and they are global, and with an average return rate of 60%. And just recently, we tested our ontologies and algorithms on 5 startups, registering a TLV of 5.2 million in 6 weeks flat. The functioning first limited version of the platform was released on 14th of September, which was last week. And I'm happy to say that as of yesterday, we had 290 active users with 70% startups and 30% of them are investors. Again, angels as well as venture funds, both from Germany and globally. So it's really great to see that people are joining the platform on their own, and we have a wait list of 1,500 people still in the queue. So just to summarize, it's a comprehensive solution for structure and streamlining venture due diligence process where founders interact with the system in a usual way, with each section assigns a quantitative metric scoring to intangibles across 5 core dimensions of the startup of any business. This way, founders are aware of what specific actions they need to take and investors can create a suitable filtering, and we can avoid bad surprises. So I'm sure some of you must be wondering, while this product was in baking, what was going on? While sitting in Cologne, Germany, thinking global, we started building a niche community of startup founders and investors and experts who believed in our vision of building a 21st century cluster economics and cloud. And I'm happy to share with you that community platform is close to 4,000 active members with an engagement rate of 65%. Our weekly newsletter reaches to 7,000 people, and our social footprint is of 6,000 plus people worldwide. We did this with over 50 investor-focused events that led to startups getting funds successfully and getting mentors to their focus verticals as well. We have over 40 plus active ambassadors that help us connect with the local geographies and help us also reach to underserved markets. We've produced also 100 plus educational contents during this time. So in the last decade, we have seen about 1.5 trillion USD invested in venture capital deals. And just this year, in the first 2 quarters, we saw just in Europe that 59 billion US dollars were invested. So this market is poised to grow with a compound annual growth rate of 27.5%, and which would also lead to unlocking the funding potential for the 4% of underrepresented founders. And we are further driving more diversity inclusion for VC investment decisions. That's our core goal. In terms of business model, the main source of revenue will be subscription model on the platform with different package options for both investors and startups. And on the top, we will offer an additional in-app purchase for both sides, such as third-party due diligence reports for investors and data room verification for founders. This is a quick view on our founding team. We have 40 years of founding as well as 20 years of investing experience with networks around the world, as well as expertise in areas such as strategy, scaling, internationalization, technology, or culture. Our advisory board enhances the skill sets by providing valuable and quality feedback and market insights. We are supported by our investors who range from noted angels in different geographies as well as venture fund. Well, thank you for listening to me, everyone. This is just a beginning. This is a journey built on data science and AI, and which we are excited to share with you. We do our weekly demos for founders and personalized demos for investors. Please reach out to me or my colleague, Michael, who's also joined as a guest, and we would be sharing some links to connect with us. Please write to me at parul@udash.com. Thank you. Over to you, Yakis.
Thanks a lot, Parul. It's been very exciting to hear what journey you've been on in the past months since we last connected here in the context of GINZAP. Yes, please share the direct link to Udash in the chat if you haven't already. Make sure people can click on it right away. And that brings us to our last input within this session and to Dörte Hirschberg. She's the channel partner at Climentum. Dörte actually has been involved in a lot of rocket projects as well. She's been Vice President Business Development at HelloFresh, founder of Deer Ventures and Idea Fox. So she's been also really out there involved in all kinds of projects. Perfect person to speak to, very well connected here. But now, of course, we're very much eager to hear what Climentum is up to, because they have a very specific focus in the kind of startups they look for, a very zeitgeist focus, I would say. Welcome, Dörte.
Welcome. Great to be here. And not to mention, I was actually in India 20 years ago for almost a year in the HR team of a software company. So I have a big passion for India and would love to get some Indian investors in here. Let me share my screen and tell you about Climentum Capital. So, präsentieren. I think it's now loading. Can you see it?
Yes.
Good. Climentum Capital is already in the word. We do investments into the climate momentum. So we want to prevent climate change, and that's why we founded this fund. We aim to raise 150 million euro for a climate investment fund that has a return rate similar to other VC funds. Our investment scope will be Europe. and we will focus on the highest emitting sectors and on the biggest opportunities to actually reduce CO2 and similar gases. So that's food and agriculture, next-gen renewables, waste and materials, buildings and architecture, manufacturing, transportation, these kind of topics. So we really talk about the big levers to actually prevent all these CO2 emissions. Our stage sweet spot will be late seed stages and Series A, with typical investments from 1 million to up to 10 million. So we try to invest into companies which already have working solutions, and first customers, but who still need to scale, and we want to support them in the scaling phase. We are a very diverse team of 5 partners. I will show you the pictures in a minute, in 3 different locations, here in Berlin, in Copenhagen, and in Stockholm. So we have a relatively broad access in Europe. We have a very unique value add to founders, because we know the impact and ESG ecosystem in Europe very well. We have great access to non-dilutive capital, and we can actually advise founders on how to leverage their climate advantage, not only for fundraising, but also for winning customers. And what is also special, we have a dual carry system. So we as GPs are incentivized by financial return, but also by the carbon reduction that our portfolio has. Let me introduce the team to you. So we are 5 people. Morten is in Copenhagen. He has a background in institutional financing and has actually invested into sustainability funds and investments for over 20 years in the Nordics. Stefan is a biotech expert with a lot of experience in how to measure CO2 emission, how to reduce them, and he will be the impact partner in our team. Then we have Johan. He sits with me in Berlin. He is French in nationality. He's an engineer, has worked not only in Germany, but also in the US for a very long time, and has worked for the venture capital arm of Next Big Thing here in Berlin. Then it's me. You already introduced me very nicely. So I have done a lot of angel investments. I have gained a lot of experience in McKinsey, Rocket Internet. I've seen founders and companies in all stages. And the 5th member of our team is Marlin, who has been in venture capital the last 17 years in companies like Industriefonden, Verdane, and also in the corporate venture capital team of ABB, which she's currently leading. So we have a team with a very strong track record. When you look at our deals combined, we have done 50 deals over the last years, and 20 of them are in climate tech. So we have invested into this topic when this word climate tech did not even exist, and really across all the sectors that I mentioned earlier, and with a strong focus in exactly the stage that we will now also invest in as a fund. Within these 50 deals, we have also already reached 8 exits, some of them with 15x multiples, and 2 very great acquirers. So we have reached quite some stuff already, and now we aim to bring all this knowledge to our fund. Some more points on what we aim to invest in. I already mentioned our focus areas. So we have these 6 focus areas, and in addition, we will also look at the carbon economy, which is mainly carbon capture and storage. This is, of course, extremely broad, and it's not only software, it also includes hardware and biotech components. So what we did is we looked at all these sectors and defined sub-areas, and we prioritized these areas along these 3 criteria, which are: how high is really the impact potential? Do we see sufficient venture activity in a certain area? And do we see acquisition potential, especially by corporations? Because we believe in climate tech, of course, we will have unicorns that scale and go up to IPO, but we also see a huge exit opportunity to corporations who have tremendous targets to reach the climate goals, and they can only reach that with acquisitions. So we actually believe that many of our portfolio companies will be acquired within the next years. And based on these 3 criteria, we prioritize strike zones. And these are the areas where we are going deep, where we are now currently building up our expert network where we're mapping all the relevant companies and do proactive reach outs to really get into the best deals. We will, on top of that, also invest into other companies outside these strike zones, but these are our investment priorities. One example, we have now done our first deal, not yet out of the fund, but out of own money. This is a company called Mutual. They are tackling the problem of cows emitting methane. And what they do is they have developed a natural feed supplement that reduces the emissions caused by cows by up to 30%. So you can actually have a steak or drink your milk with a way better carbon balance. The founder is a serial founder, actually a German founder now in the UK, who has done 6 exits and who has so far scaled this company with his own money. He has already invested 15 million into the company and has now done the first seed round with a save of 4 million, where we took a share and we co-invested here, for example, with Lower Carbon Capital, which is a huge US fund. They just raised 800 million euro. And this is a company that we now did a small investment, and we have signed an LOI with Thomas that our fund can actually invest into the Series A, which is planned for end of this year. So here are the core facts, again, summarized for you. And if you're interested to invest in us, we are actually now in the first close and aim to close that until November. Please reach out to me. So again, our target fund size is 150 to 200 million. First close target is 75 million, and that's planned for this November. We have normally a minimum of 1 million per investor, but we do make exceptions for strategically important investors. So in case you are actually an active player in the carbon ecosystem and you have a special angle to us and want to help us on this mission, we also do smaller tickets. The fund lifetime is 10+3. We have an investment period of 4 years. And then it's a Danish fund with a typical management fee. And the interesting point is that our carry will really depend on the CO2 emissions that our portfolio companies reduce. So investing in Climentum Capital, you can actually reach a nice return, but also help this planet to survive the next decades. Thanks a lot for this round.
Thanks a lot, Dörte. I mean, I personally am very passionate about this topic. But I think apart from that, it's also economically, apparently currently climate tech is the best sector to invest in. It has the highest return rates for VCs. So that's really interesting. But that's not our focus today. Today, we really want to focus on the Indo-German bridge, as we heard from earlier already in our keynote. So let's get back to that angle. But before we do that, let's get Anne, Miguel, and Parul back here on screen so we can have a little panel discussion with them. And most importantly, pass on the questions that I already found here in the Q&A chat to you guys. I have a couple of questions myself, but I think I want to first start with the ones from our audience. And we'll just have a loose discussion without a red thread, but just make sure that we answer the questions here. All right, that's one generally to everybody, actually. Do the funds already have Indian investors on board? What was the average investment they made into the fund? So which of you guys are already working with Indian investors? And to what extent? Anne and Dörte say no. That's a quick answer. And we'll get
German
back. Yeah.
Danish investors.
Sorry?
We currently have German and Danish investors, but we would love to have more international breadth, depth.
How is it looking for you, Parul and Miguel?
No Indian investors for us.
No? Okay, Parul?
So we are actually on, we launched last week. We do have a few angel investors from India who've signed up onto the platform. So, and we do have some Indian startups as well. So the startups here today, feel free to join the platform, and we are onboarding more and more investors. We have one of the largest angel network from India already present. So I'm sure through them, you can access more than 200 to 400 angel investors also.
Mm-hmm. Wonderful.
Can I ask a question back?
Yes, please do that.
Because I would actually be interested in Indian investors' appetite for investing into European VC. Like thinking about them, I would expect them to, maybe it's wrong, right? But to maybe eye more on US. And like, why would they want to invest into a European company or into a European fund? Is the interest really there? And then maybe add-on question, how is private wealth being managed? If I understand like Philippines and Thai investors correctly, they go, for example, to Singapore. But how does that look for Indian investors?
That is a very good question. Unfortunately, we do not have the Indian VCs here in the panel right now, so we'll play it indirectly, I think I would say, over Parul and Miguel. Do you have an insight into that in which you feel confident to talk on behalf of Indian VCs?
I can talk a little bit about the first point, but I think Anna may have heard this from me already. I think generally in emerging markets, the big difference is the wealth has just been created over the last few decades, and there's very little intergenerational wealth, right? So the family offices are not as sophisticated yet. So you're right. The default is to go to the largest market, right? The default is usually the US. But a lot of the families, and I'm talking about Southeast Asia, I'm not exactly familiar with India, but a lot of the families started investing, over like more than 5 years ago, right? The pioneers were investing 10, 15 years ago already in venture funds in the US. So now they have an appetite for something different. And that's what I'm seeing in my network, at least. In Southeast Asia, a lot of families are starting to look at Europe now because they've seen the US. And the European growth story, I find is quite compelling as well. So that's the answer to the first question from my perspective.
Yes, thank you, Miguel. That's great. Parul, do you have an insight to share on that?
So I can talk to that a little bit. I mean, I can say that India and Germany has been great trading partners historically, and we have a lot of Indian, corporations already having presence for more than 20. I mean, in my experience for the last 20 years, I've seen more and more coming here to Germany. So talking about established players, they are present here and they have a capability of, investing directly as corporates, right? So for example, if we take Tata's or other big brands that are there, so they could potentially do that. But when we talk about startups, I think there's a lot more work that needs to be done. US and UK default because of the comfort in the language and, sharing that basics to communicate with each other, that kind of becomes a default. And a lot of investments kind of were bridged because of the Indian people who went to US for maybe originally as working there, they made it big, and then eventually they had roots in India. They played as bridge, and a lot of people diversified into financial industry as well. And as India started to boom and grow, people started looking back home, and that's how those natural ties happened. I would imagine that for Germany, there is a lot of work that needs to be done. And I think GINSEP is a great platform. And I think we can figure out something. What are the blind spots here? What needs to be uncovered? I'm sure there are there's a lot of latent energy there. There's a lot of potential to be unlocked. I know that Lufthansa does a great job by being present in Bangalore. Maybe we need to spread in different locations. We need to go to bigger other hotspots, and the infrastructure in India has improved a lot. And I see myself that's changing as I interact with people, tier 2, tier 3 cities. So there's a lot of opportunity to be unlocked there. And I think in times to come, that can happen. It's a very valid point that Anne brought here. And I believe that GINSEP can definitely help pave way to find a solution to that.
Thank you.
On the chat that Aline asked Arnab and Sanjay if they're listening, they can share their thoughts here in the chat, because I think they might have a great insight there. So please also write an answer to that in the chat. Before we come back to the topic, I'll just squeeze in 2 more audience questions that go in a different direction. One goes in the direction of you, Anne, I think. Hi, Project A. Could you share any success stories of embedded computing hardware startups, if any? Is that a topic for you? Embedded computing hardware startups, Anne?
Unfortunately, hardware, not at all. So we're not a deep tech fund, but we're tech focused. So hardware aspects have to be very, very, very minimal. To give you a very easy example. So for example, Micropsy is a company that creates a software for robots so that cobots can make organic movements. And that's what then be kind of like the compromise for us, because we would never invest into a company that creates a robot. Just to give you an example. So
All right.
it's computing, that's where we would then come in.
Makes perfect sense. A quick question for you, Parul. What are the requirements for investors to join the DueDash platform?
So the requirement is you have to be an investor, active player. Just join, just reach out to us and you can join the platform.
All right, thank you. So I just wanted to make sure we answer the audience questions. Now I would like to come back to the Indo-German angle a little bit. So in what scenario would an Indo-German connection be relevant for you, Anne, or for you, Dörte? Like, would you see maybe, Anne, is it if one of your scale-ups also starts to internationalize and set foot in India, would that be a scenario? Or also looking at other collaborations?
I think you could have a look at it from 3 angles. So one would be growth. So that's what you're saying. If they internationalize to India, yes, that could be interesting. To take it even a step further, even as an exit country, maybe India could make sense, right? So that's one for sure. I think Indian investors could be interesting for us as LPs into our fund. That's why also this is also kind of where my question earlier was coming from. But thirdly, unfortunately, also because of our LP base, we would not yet, this might be a bit of a bummer for some, it might be a bit disappointing, but we would not yet invest into Indian startups because we've got known investors such as the European Investment Fund and so on. And they really want us to see us contributing to the European ecosystem, right? They're using European taxpayers' money. So that's one reason why we're still very focused on European-based startups.
All right, I get that.
Yeah, maybe, sorry, one more little point. If any, we would have to see some kind of relation to Europe. So if a substantial amount of revenue is created in Europe, that could be okay. If a founder is based in Europe, that could be okay. So if we would have to see a strong one to Europe.
All right. So see if you have as a startup, you have a large footprint, so to say, in Europe or in Germany, then Project A could be interesting in regards to the Indo-German connection. And by the way, I think you also invested in Butter, which is one of my most favorite conferencing tools at the moment. I know they have a large client base in Asia already. Yeah, that was fun to see. But to you, Dörte.
Yeah, so for us, climate change is a global topic. Yeah, so we cannot leave out such a huge country as India, and this would actually be a big benefit to have also Indian players in our network, because this will be a huge market for all our portfolio companies with regards to customers and tracking the market and so on. So it's definitely important to us.
Mm-hmm. And do you already have some concrete ideas, concrete steps, maybe first talks in the pipeline, Dörte?
So I mentioned earlier,
in the other direction, you have a platform here. You can put out a demand or your wish list in that regard.
Yeah. So to me, a lot currently is around expertise. Yeah. So when you know someone or you are actually an expert in one of these fields, and you maybe know especially the emerging market component of that, yeah, that's super relevant to us, because this will be very important when we assess all the companies. And as I mentioned earlier, I lived in India for a bit of my life. I did some projects there in introducing European trucks to India and stuff like that. So I actually have some personal connections, and I would love to have reasons to fly more often. Hopefully that's possible now again, back to India. Yeah, so a huge personal interest.
Okay, perfect. So make sure to connect with Dörte on LinkedIn, maybe tomorrow even on DueDash, Dörte, if you register, and then see if there's a connection specifically in the climate tech area. Miguel, I think your approach sticks out because you really have one of you sits here in Berlin, the other one is in Manila. I guess that's probably a prerequisite to be active in both markets. I could imagine that as a VC, if you have your whole team just in that country, it's hard to get a foot over there.
I would say yes to some extent, but at the same time, it's also a function of the skill sets of the two managing partners. So I've been doing mostly fund management and finance for the longest time. So I'm more the investment part of the equation. So I normally sit in Berlin because I'm the one sourcing for investments and looking for investments. Whereas my partner comes more from an operational background. He worked in a venture builder, started a lot of companies already. So he's in Asia because he's the one that's supposed to help the companies, the German companies, enter the market, right? And that's where we make use of our network. We help them set up. So it's a little bit a function of our skill sets. I think that, because we're a small team, there's actually value in having both of us in the same place. But it works, especially now that everyone's working remotely.
Miguel, maybe from your perspective, if you look at, now know what Anne is doing and Dirte is doing, do you think there might be an opportunity that they're not aware of, that they're missing? Because you have an insight into both markets, yeah. Or what do you see could be a graspable potential?
Yeah. Well, for me, the advantage of being cross-border is like from where I usually sit in Berlin, I'm in the future, right? Meaning I see what's happening in a developed market, and then I can always take a look at what's happening in my home market and see, all right, the trends will, this is probably where we're going to be headed in the next few years. There's going to be some consolidation. I can also be looking at specific trends, which I'm sure will quickly cross over the pond over the next few months. So I enjoy being in the future and then looking for opportunities. I enjoy looking for opportunities in emerging markets based off of what I know here being in Germany.
Mm. Wonderful. I see with regards to time, I already have to wrap up here. Just to make sure I didn't miss anything, Parul, I just saw quickly you made a hand raise. Did you want to add something to what
No,
we
I
talked
just
earlier?
said thanks for saying to Dorothy and Miguel to join your dash tonight. So that was thumbs up. Thank you.
All right, perfect. Yes, so thanks a lot, Parul, Miguel, Anne, and Dirte for your insights there. You're more than welcome to stay here also specifically then for the kickoff of the Investors Circle later on today. Let me just find you the exact time. For you, that would be 1:45, so 1:45 Berlin time, if you want to be part of that. Hear more about it, Dirte, if you want to see what could get you on the next plane to India to find a reason. That would be a great slot to rejoin us here. Thanks a lot to the four of you.